Welcome to today's more important analysis videos on Thursday 14th of June with me, Rich Perry, market analyst at Hantec Markets. Big reaction to markets in the Fed from the Fed last night. The Fed hiked interest rates by 25 basis points. Slight hawkish tweaks to the statement and also the dot plots and also the economic projections. However, the market has not really taken that especially well in terms of the dollar. Initially, the dollar went higher on the back of that, but subsequently sold quite sharply lower. So this big turnaround came as bond yields did this similar move. The 10-year Treasury yield went above 3%, but then closed back below and has fallen again today, back towards 2.95%. The yield curve continues to flatten. Look at the spreads between the 2s, 10s, which is the yellow line, and the 3s, 5s, 30s, which is the pink line. All still falling, so that reflects the flattening yield curve. So this seems to be that the bond markets are not really trusting what the Fed's dealing out, and certainly it is hitting the dollar today. Now, also what we've seen is the equity markets, which are falling back in the European session across the board, about 0.5% lower. The S&P 500 fell around about 0.4%, so it's pretty much played catch up on that move, and the Asian markets also lower. Now, the weakness of the dollar has helped gold to rebound higher. Gold was sort of bounced from around about 12.94 last night, so around about $8-9 higher from there, back into the 1300s. 1300 is a big resistance area. I'll talk about that in a bit. But interesting moves from this Fed. Now we go into all the data points today. Lots to get through. Retail sales to the UK first up, expected to improve to 2.5% on the year-on-year ex-fuel. Retail sales for the States this afternoon expected to come in at 0.5%. However, what we are looking at is also the main event of the day, which is the ECB. The ECB is at 12:45, announces rates, and is not expected to move on rates. 0.4% on negative on the deposit rate is expected to continue. Now, the discussion of the APP, on the other hand, is the sticking point. Will they formally announce a program to end quantitative easing or bring it to a close? That's the question today. They could discuss it and also not formally announce it. That would be the other factor, and with a view to formally announcing it next time in July. But I think whether it happens today or July is not really an issue. It's just a matter of timing, really. I think the fact is that they are discussing it, which suggests that they are likely to wind it down in September, taper it back towards December, and end it in December. That's my expectation, anyway. So, lots to go through today, lots happening in markets, lots to impact on trades. So, my chart of the day is sterling yen. Now, what we have seen is sterling yen. I talked about euro yen yesterday. Sterling yen is a very similar looking chart, both having sort of breaking these downtrends, both forming these new uptrends. Now, we've seen a bit of a consolidation yesterday with the yen having regained a bit of strength against the dollar, and it's sort of happened again today. It was slightly lower, but you're testing that uptrend. Now, the interesting thing will happen with these momentum indicators. The RSI around 50, MACD lines are still rising, as are the stochastics, but you still need to see the market holding on to this breakout above 147. There is a nice little higher low support at 146.10, but that breakout of above 147 figure, which was the old lows, which theoretically become a basis of overhead supply. If you start to drop back below 147, I think that is a concern, because that would also come with a broken uptrend as well. So that is your key level I'm looking out for, 147. Now, if the bulls can sort of hold up this with this uptrend, you're sort of looking for a breakout above 148.10, which is the recent higher from June, and then that would reopen 150 again. So it is an important moment, I think, for the development of this recovery on sterling yen. Let's look on the hourly chart, whereby we're basically just settled into a bit of consolidation now. Looking on the momentum indicators on the hourly, very sort of benign, rather neutrally configured. You've got that support initially at 147, sort of 147.15 area, 147.10. If you break below that, then that would obviously put pressure on 147, but 147 is the key level that I am looking for. So with that in mind, I wish you good luck in your trading today, and I will speak to you later.